Welcome to the latest Motley Fool scoreboard. I'm on in Chock-a-Bloom. We've got longtime fools Tyler Crow and Jason Hall giving a 1 to 10 rating to a Moneyball stock and a building materials company. It's Top Build, ticker symbol BLD. Talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Jason's at a 6. Tyler, you're at a 7.
Yeah, I give 7. It's a weird combination in the construction industry. It's a building products distributor that specializes like in insulation and weatherization products, but it's also an insulation subcontractor. So it has its own service crews go out and actually do the jobs. About 60% of its revenue comes from the contracting side. So it's a little bit more of a contractor than it is a distributor. A well-run distributor is a great business to own. I love distributors. And I think Top Build is a combination of a well-run distributor and also broadly a consolidator of a very fragmented industry, which, if you can acquire things at a good price, that can be a wonderful value creation machine. Vulnerability is that distribution is intensely competitive and there isn't necessarily anything novel that it's doing that can't be replicated by somebody else coming in. It's just that no one else wants to do this work because insulation is kind of a crap job.
Yeah, I went with a lower score because of something that can be a weakness, but if they continue to do it well, could be the strength. And that's the cyclicality and the fact that most of the revenue does come from the contracting side of the business. And that business is affected more by cyclicality because of labor, right? So I think that creates a unique risk. They've proven the ability to manage that. But to me, just thinking about the downside of that right now is something I think investors should be really cognizant of.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson, Jason's in an 8, Tyler won't be beaten with a 9.
Probably one of the best management scores I've ever given. 9, because Top Build management has 2 things I really like to see. Number 1, it's a tenured management team that's kind of risen through the ranks of the company. I think that's a really strong sign of corporate culture. Its current CEO started with a Top Build acquisition company way back in 1997. And it's kind of risen through the ranks ever since. Most of its operations executives have more than 25 years with a Top Build company or something Top Build acquired along the way. I also think its management compensation plan is exactly what I'm looking for. It incents growth, per share value creation, and capital efficiency all at the same time. I think when a management team puts things like return on invested capital and its weighted average cost of capital like in its investor presentations, that normally is a sign that they're kind of focused on the right things.
Yeah, there's 2 pieces of that just to dig in a little bit more that are the reason I gave it an 8 is when you're getting into these niche businesses like this that are specialists and you have your reseller business and then you have the operations of actually going out and doing a job, you have to have people that understand that business very, very well, right? In 2 different businesses, you need to understand both part of those in different ways. I think that's hugely important. And because this is a consolidation story as well, you have to understand cost of capital. You have to be good at it. The ones that are good at it are enormous compounders. Like they create tremendous value by doing that. So I'm giving them an 8. And I want to say this too, just to be clear, Tyler, for you, a 9, that's like your Spinal Tap score here. You don't give those out. That's like an 11 from you.
Yeah, pretty close.
All right, let's move on to financials. A 10 is a fortress. A 1 is yikes. Both of you have 7. So Jason, since you finally tied Tyler, you can go first.
Yeah, and it's rare that I ever have a score that's the same or lower than Tyler. It just tells you how bullish he is about a lot of parts of this business. So I came in at a 7 because the working capital, that's really important for this sort of business where you don't have to necessarily have a lot of assets on the books. I think it's sufficient for the needs of the business. The balance sheet's it's strong-ish. I think if you think about their balance of debt to assets, and the margins are great during good times, but its expenses are not really going to be onerous during cyclical lows. But its profits are certainly going to be affected, and its cash flows are going to be affected as the cyclical down periods happen.
Yeah, same thing. Balance sheet's neither good nor bad. Some debt on the books. Yeah, whatever. I'm not going to worry about it too much. The business requires like next to nothing in capital expenditures because it's a distributor and a service contractor. So there's like only working capital and I don't know, maybe some office furniture as a fixed asset. So its growth waxes and wanes with the construction cycles. So like you kind of have to manage that, but it converts free cash flow at such a high rate that it can take a pretty big hit on the income side before things get too bad.
Tyler, let's move on to valuation. How well will Top Build stock do over the next 5 years? How safe is it? A 10 is a sure thing. 1 is a lottery ticket.
So I went 10 to 15, and this was my worst part, was the safety score of 4. 10 to 15, it doesn't sound like the best thing, but like that's really good. That's like better than long-term market averages, despite our really good run for the past 15 years. I'm putting quite a bit of faith in management to keep running the same playbook it has. And at currently 17 times earnings, it doesn't take a lot of growth to justify that kind of valuation. I gave it a lower safety score because it is in construction, even though it's not just residential, it's industrial manufacturing and all that other stuff that involves insulation. But, anybody that says they can predict where construction market will be in 5 years, they're full of baloney. I don't believe them. So you kind of have to be like, we could see a downturn.
So naturally, I'm going to predict that I think there's more risk for construction in the next couple of years than I think there will be 5 years from now. But Tyler's right. Nobody can really predict that. But what I'm thinking in terms of the reason I gave it a higher safety score of 6, same expectations in terms of average annualized returns, is 2 different cohorts of businesses, or 2 characteristics of businesses that are often very successful. We talked about consolidators, right? Those bolt-on acquisitions. It positions the business to be able to continue to grow and take more market share. So even if we do see a cyclical downturn 5 years or so down the road, it's likely to be a bigger business. So it kind of raises the floor a little bit, I think. But also spinoffs of really great companies that have a market-beating history. Often those spinouts can be even more successful than the parent company they were spun out of. So I don't want to correlate. That's just correlating those 2 things, right? But I think there are signs that we could see causation based on management, the quality of the business, and those sorts of things. So I'm willing to go a little bit higher on the safety score than Tyler did.
Let's go to everyone's favorite topic. Jason, is there a company in Top Build space you like more?
No, there isn't a company in its space that's large enough to be publicly traded, really, that's a competitor. But I think the key with this kind of business, though, is that because it is pretty specialist, it's not just a set it and forget it business. I think you need to understand it, its industry, the cyclicality, and be willing to move quickly if we see a massive cyclical downturn that's risking your capital. The stock's just gotten way ahead of itself, right? So I think if that's not what you're willing to own because of the time that you need to put in to understand what you own, a company like Trex, I think, is really compelling. The valuation looks interesting to me right now. It's tied to the housing industry, especially single-family home sales. That part of the cycle is a mess right now because there's no inventory, but it's been such a market share taker over the long term in composite decking, and it's such a profit-building business. I really think buying it right now, it is more the kind of business that you can own comfortably from this valuation and hold 5+ years and still be pretty happy with the price that you paid today.
The only thing I'll say is, unfortunately, we have to keep this under 30 minutes because I could do like Bubba from Forrest Gump and just like gush about all the specialty distributors out there that like hold a special place in my heart. But we'll try to keep this one for the next one. All
right. Top Build survives. Top it. Thank you to both Tyler and to Jason. You've given Top Build an all right overall score of 6.9 out of 10, with management being the high score and worries about cyclicality kind of dinging it a bit. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a REIT. Till then, Fool on. I feel like there's a column A of obscure industries, column B, obscure geographies.
We have a running joke on a made-up Indonesian rubber company called Bamalang that I'm a huge fan of.
It's a great name, too.